All right, so 14.6 is finishing up our worksheet. With my projector's not turning on. Okay, when we take a look at our worksheet, so far we have gone through and we've done our trial balance. The purpose in a trial balance is to make sure our debits and credits equal. If your debits and credits don't equal, don't do anything else. Rule number 1. Always obey rule number 1. Okay, the next thing that we do after we get our debits and credits to equal is we go through and we do our adjustments. The things that we adjust are going to be supplies, prepaid insurance, which is what we have done previously. Other things that we learned about in this chapter for adjusting is going to be our allowance for uncollectible accounts. We have some people in the world that said they would pay us and then they don't. Shocking. I know. So what we do is we take a percent of our sales on an account and we multiply those and then we get our adjustment. So the number that we have here for our adjustment for our allowance for uncollectible accounts, 2,120 we got by multiplying those two numbers, and the number that we got in the answer is the amount that we put there. The other things that we adjusted was merchandise inventory. Merchandise inventory is our account that we use because we are selling products, okay? So if I'm selling remotes, am I making the remotes? Okay, I am not a manufacturing company. I'm a merchandising business. So merchandising means I sell the product to you. So I'm going to buy this from somebody else and then I'm going to sell them to you. Okay. Now, if I sell you this remote for $50, is this $50 worth of profit, excuse me? No, because it cost me something. So I have to deal with the cost of merchandise sold. The cost of merchandise sold is going to be what I use to determine more of my profit, okay? So when we take a look at merchandise inventory can go up or it can go down, okay? So throughout the year when we buy more remotes, what account do I use? If I'm going to buy a remote that I'm going to turn around and sell to my customers, what account is affected? Purchases, okay? So merchandise inventory, that account is used just to account for the value of our product at the beginning of our fiscal period. Okay. Anytime we buy more product and more product and more product, then we're going to put it in our purchases account. Good to go? So merchandise inventory could go up or down depending on what's happening. The last one that we did on Friday, 14.5, was dealing with our depreciation. For our depreciation, we go through and we take a look at what is its useful life and what is our estimated salvage value and the original cost. From that, we will be able to calculate our straight line depreciation. Straight line depreciation is the value that it depreciates each year, and it will depreciate the same amount. Your vehicle is not straight line depreciated because your vehicle is going to depreciate based on what? Miles. How many miles you use. And that will vary depending on each person and whatever's happening in their life. Okay, but when I take a look at this computer is going to depreciate. It doesn't matter if I use it 17 hours or 40 hours. It depreciates based on how long I own it, because the longer I own it, the less it's worth, and the more dusty it is. Okay, does that make a little bit of sense? So somebody goes through and calculates our depreciation for all of our assets. They give us that number. So they're going to say, my depreciation for office equipment is $7,320. That number goes in the adjustment column. Okay. The last adjustment that we need to do, you can see is highlighted here, is our federal income tax. This is the hardest part of this chapter. Okay. Here's what we have to do. We have to calculate our net income, and our net income is going to determine how much our federal income tax is. So you can miscalculate your net income, which will throw off your federal income tax, which will throw off your worksheet. Does that make a little bit of sense? Think about it. When you pay your taxes are based on how much money you've made, right? Same thing's going to be true for a business. What we have to do right now, the first step in order to calculate my last adjustment is actually to find out my net income. My net income is based off my revenue and expenses. Plus, I have to deal with my cost of goods sold. Okay, purchases. Purchases as a cost account has a debit normal balance. But we have two contra accounts to purchases, and that's going to be purchases discount and purchases returns and allowance. Remember those accounts? What is the purpose of purchases discount? What do we use it for? Yes. So we're buying something, right, that we're going to turn around and sell. And whoever we buy it from says, hey, you're awesome business. We'll give you $30 off. That $30 off has to go in purchases discount. Okay, what about purchases, returns, and allowances? Okay. I no longer want to sell that remote, and I return it, right? What are those going to do to the value of purchases? Lower it. So purchases has a debit normal balance, so our purchases, returns, and allowances and purchases discount will have a credit. Got it? Now, we have the same thing for sales. Our sales account has a credit normal balance. It's a revenue account. We have sales discount, and we have sales returns and allowances. What is the normal balance of sales discount? Debit, because we use it to keep track of what is taking away from our sales account. Now, why don't I just put sales returns and allowances right into my sales account? Why do I keep track of it separate? Correct. If we find out that throughout the fiscal period that half of the merchandise we sell is being returned, what does that tell us? Yeah, we got some crap we're selling. Nobody wants it, right? And that's a lot of extra work from our business, too. So we have to take a look at what's going on. Is it our return policy, or is it the product that we're selling? Do we need to change it? All of this information we use to keep track of to make better decisions for our business. So when we take a look at what goes on our income statement, here's going to be my number one hint for you. Income summary down. Goes on your income statement. Does that make sense? Right now, it's like a slap in the face because you know where it goes because Applia has those spots filled in for you. But you're going to have some assignments where it's not, and you need to know what goes where. So income summary down is going to go on the income statement. So what I need us to do right now is we're going to do only my income statement columns, not the balance sheet. So I'm not starting here up at the top because when I take a look at my directions, that important stuff, it says extend all amounts except federal income tax in the appropriate income statement or balance sheet columns and do not total the columns. I'm going to do just the income statement. So income summary is going to go on my income statement column, and it's going to go as a debit. Sales is going to go as a credit. Do not carry over your federal income tax, okay? Now, does yours match mine? You should only have 3 credits. A lot of people accidentally put depreciation expense, office equipment, store equipment, and insurance expense as a credit on the income statement, but it really is a debit balance. What I need you to do right now is you're going to take a little bit of time, and you're going to use your calculator, and you're going to add up the income statement debit and credit column, but I don't want you to put it on the worksheet. I want you to put it in this spot right here, okay? So don't put it here, put it down here, because we need to calculate our federal income tax. Credit column total. What do you think, Kelly? Do you like Phil's number or no? I do. You do. Marcus, what do you have for your debit? For your debit? Well, I asked for credit, which you gave me. Now I'm asking for debit. They should not equal. No, they should not equal. Why shouldn't they equal? What are we trying to calculate? Whether or not we made money or lost money. If they equal, what would that mean? Let me tell you, we're not breaking even. We're either going to be positive or going to be negative. But if you take a look at it, are we making money or are we losing money? Take a look at sales column. You have sales of $845,000, right? So you know that's a pretty big number. And if you do a quick glance down on your debit column, you should not be over $800,000. Would you agree? So we know that this is a net income. Can you do a quick estimation on that? Okay. So, Kelly, you got a debit number for me? Give it to me. Cents, please, again? 40 cents. Ding, 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 ding. Winner, winner. What does that give us for our net income? 145, 655, 94. Right? Okay. Now, we need to go to this right here. Okay? So, what we need to do is we need to go through and calculate our tax, okay? So what they're telling us, and this is in the book, this is a section on there, they're going to go through and say the first $50,000 that a business makes, they're going to be taxed at 15%. So right here for the rate, you're going to put in 15. Because they tell it to us in the book. Yes. The next $25,000 is going to be taxed at 25%. The next $25,000 after that is going to be taxed at 34%. What are you finding? What is the trend? The more money they make, the more it's being taxed. Would you agree? Now, the next number we have over here, anything over $100,000 is going to be taxed at 39%. So what does this mean? If a business only made $50,000, their tax rate would be 15%. Now, if they make $75,000, the first 50 is taxed at 15%. The next 25 is taxed at 25%. Yes, only 25. Okay? So they're saying here the first 50,000, the next 25,000, the next 25,000. If I add these three numbers together, what does that give me? 100,000. Okay? So this right here accounts for the first $100,000 that a business earns. Anything over $100,000 is going to be taxed at that 39%. So that's what we need to put here. The total federal income tax that we calculated, that 145, 655, 94 is going to go here. We're going to subtract 100,000. You better be able to do this without a calculator. Subtract 100,000 from that, you're going to put in there your 45, 655, 94. Now, what you need to do, multiply. 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 This last one, take only that 45,000 times 39%, multiply, and then add down. Okay, This is where you are going to have the biggest problem. In the future, they are not going to give you this tax table information below. They're just going to expect you to be able to calculate it. Okay? Which you can. They're just not going to do points for you. So, basically, what we have just calculated for coastal aquatics, this is their federal income tax for this fiscal year. What did they estimate their federal income tax was going to be? Yeah, you do. Yeah, it does. Line 49. 40,000. Okay? And I told you, do not put the number for federal income tax in your income statement column. Don't add it in. You needed to find your net income here without your federal income tax. Does that make sense? So we don't put anything in there. Now what we need to do, this $40,055.82 goes in your income statement column as a debit. Now, what is the amount of your adjustment then? Yes, as a debit. And then it would go in federal income tax payable as a credit. Guess what we get to do now? We get to do some serious math. Okay. The difference between these two. It's the adjustment. You need to, after you got your 5582, which is the difference between the number that we calculated here and what they put on their estimated taxes, you need to go through and add up your totals for your adjustments, debits, and credits. Debits and credits to equal on your adjustment column total. Then you get to start working on your balance sheet. And you can see that I went through and I have numbers here on my balance sheet. You need to carry those numbers over. Don't forget to account for your adjustment column. So you have debits and credits here that you need to add or subtract to get your new numbers. It's not just take the number from the trial balance and put it onto the balance sheet. Your numbers, when you go through to add up your income statement credit number you should already have a total for. Would you agree? Okay. Your income statement debit number you almost have. You just need to add what number to it? The $40,055.82. Okay. So make sure that you put that on there, and then you will have your totals for your income statement debit and credit. And then you need to get your totals for your balance sheet. So go ahead, keep going. All right, ladies and gentlemen, this is what I got so far. So I went through and I totaled up my adjustment column here for $41,377.22. Okay. Then I have this number you already had, so this one should not have been a difficult one for you to add up. This one, all you needed to do was take your $714,284.40 and add your $40,55.82 to it, and that'll give you your $754. So When I do that, that gives me my net income after federal income tax. That's an important word. That's what goes here, not total. Net income after federal income tax. Okay? So when I go through and do the math, what is my net income then? 105,612. Now, if my 105,612 goes here as a debit, it therefore has to go over here as a credit. And notice I did that even before I put my totals on there. Why did I do that? That's it exactly. I need to check. So when I go through and do my balance sheet totals, I'm going to have a balance sheet debit and I'm going to have a balance sheet credit column total. Should they equal? Should not. What we need to do, the purpose of our balance sheet, again, is to prove that our assets equals our liabilities plus our owner's equity. Okay? Our business has been in operation. Who gets the net income? The stockholders. Stockholders' equity has what for normal balance? Credit. That's why this 105,612 goes on the balance sheet as a credit, because it's going to raise the income of our stockholders' equity. So when I go through and get these two numbers, when I add down, my debits and credits should equal on my income statement. Income statement and my debits and credits should equal on my balance sheet. So you should go through and do that.